Of course, a very good morning from him, and of course, it's a very good morning from me. I hope you're well on this Monday morning in July. School's breaking up in a couple of weeks' time, I think. And yeah, it's just a crazy world at the moment, isn't it? Right, sort of very crazy world. But we'll talk about that as we carry on, because we're all about the mortgage business and financial services world as well. So yeah, let's go online. I'm Paul Archer, as you very well know, and I hope all is well with you in your world, in your life, in your summer, in your holidays, your work, and all those good things. Got a couple of topics for you today. Just want to summarize the government's charter, the mortgage charter. Lots been said about it, and I've mentioned it before as well, but it's now all been confirmed. And the FCA have swarmed in now, and they've amended their rule book, so it's all pucker. So we just want to give you a quick summary on that one. And while we're on the subject of wearing the economy, the recession, the interest rates, call it what you like, I just want to share with you some ideas about how you can be more attractive to clients, and not by putting on a nice suit or whatever, but how you can be more attractive emotionally and mentally to clients. So I've got a little technique for you later on in this live stream stroke podcast. So let's get on to our first topic, shall we? And I think we'll go over to that whiteboard. We'll go to that whiteboard, shall we, for the first topic. So let's get on to our first topic for you. We'll talk to you about the UK Mortgage Charter. Now, this is quite important actually for you if you're doing mortgage MOTs with your clients, which you should be doing anyway, 6 monthly, yearly, whatever, 12 months before their fixed rate ends, all those good things. You should be doing regular catch-ups with your clients. Probably on video, because that saves the environment and it's more inclusive as well. You don't have to jump in a blooming car and use all that petrol to go across to see people nowadays. So if you already know the client, you've already got that rapport. And you may want to talk to them about the charter. Now, the whole point about the mortgage charter is that the government have been under a lot of pressure for bailouts. When's the government going to bail us out? But you're not going to bail out 4-5 million mortgage holders, are you? Who tend to be a certain demographic in society. Not going to go there, but it does. You can't do that. You can't bail out everybody. It doesn't work that way. But you can provide some assistance and help as well. So Jeremy went storming down to the building societies and came out with some deals. So what did he come back with? Well, he's got a charter agreed, which is kind of like an agreement that everybody gets to. But the FCA, as I said, have stormed in and made it part of their rule book now, so it is quite official. And there are 3 bodies involved here, all with their own contribution to the charter. So first of all, over here on my whiteboard, we've got lenders. Now, most lenders have signed up for the charter. I mean, there's a list of 30, 40, 50 lenders, and it's good they have. So what are lenders going to do to people if they're thinking that their mortgage is going to be unaffordable? And let's face it, I mean, I was looking at the rates this morning. We're on a 1.9 fixed, I think, and we're coming up middle of next year, and we'll probably have another 4-5% on top of that. Who knows? That's a lot of money in anyone's book, whatever size mortgage you've got. You're talking about hundreds of pounds. You're talking £700, £800, £900 per month. Now, people will have to find that. They will find it by cutting back. Of course they will. They'll cut back on everything they can cut back on. But there may be some people who are really struggling. They've got unsecured debts elsewhere as well, and families and all that kind of stuff. So what are the lenders going to do? Well, first of all, they have said that number one is that repossession, or repo, as we call it, is the last resort. It's always been that case anyway. And they got this 12-month moratorium as well, where they can't repossess for 12 months. But that's something they did during COVID as well. So that's not new as well. They've also got the ability to switch your product transfer, your PT. You can switch with no affordability. Again, that's always been around. That's always been available. If you're doing a straightforward switch, not raising any more money, they're not going to look into your affordability or do credit checks or anything. But again, they've always had that available for you, and that's a key thing as well. You can now, this is quite an interesting one, you can lock into a fixed rate 6 months prior to your actual date of fix coming to an end. So if you see a lower one come in later, you go for it. So for example, mine's coming up in, I think it's May next year. So around about sort of October, November time, we could go along to our lender and fix into whatever rate's available. And if that rate, if there's a better rate comes down, we can switch over to that with no money, no costs. But obviously, if rates go up, we're happy to have fixed it at low rates. So that's not a bad thing. I think to a degree, you probably need some broker help with that. It's worth paying for a broker to give you those ideas. And obviously, she's going to broker the market for you as well and look at the best opportunities. So it's worth a small fee to a broker just to make sure that's the case. I mean, what's an average broker fee now? 500 quid, and for a monthly mortgage payment, £900, £1,000. It's a lot of money increase, so it's probably worth doing, and that's important. Now, here's the key two big ones. I think I'm doing in red now. The first one, which is a deal changer, this is changing everything, is they can switch to interest only. You can switch to interest only whilst you fix your new rate or whatever that rate it's obviously gone up. You can switch to interest only. You can do that for 6 months and then you switch back, and that's self-select, and that's the crazy thing about it. The self-select thing. In other words, you don't have to phone somebody and talk to somebody at the lender and beg to have this facility. You just go onto your portal and press a button without anybody knowing it. And that's the key thing. A lot of people don't like to admit they can't afford their mortgage. It's a lot of psychology. But if somebody can do it, just press a button, nobody knows. You'll find a lot of people will do that. That will probably save them some money for a 6-month period, which is pretty good. You can also extend the term. Extending the term on a repayment mortgage might make a bit of difference. Plus, switch to interest only. Of course, that's not going to make any difference if you switch to interest only anyway. It doesn't matter what your term is it? But you can do one or the other to make it better for you. And again, you would revert back in 6 months' time. But the great thing is there's no affordability check here. You see, let's put that in there for you. No checks, no affordability, and it won't affect your credit report. They reckon as well. Although they'll probably share the information and ask for it if you apply for a mortgage later on. But it's a bit like when we had the 3-month payment holiday back in 2020 during COVID, isn't it? So they're good things. They're good things. So if somebody really is in the poo, then they can switch to 6 months interest only, and that will probably give them a bit of respite, really. And then obviously the repossession is the last resort. So that's the lenders. Now the UK government, Jeremy and his pals, have decided they're going to offer some stuff as well. So the UK government, there you go. What have they offered so far? They might be under pressure to offer more. I don't think they'll give in to this because they have stated quite categorically that there's no money. Even Labour have said if they come into power next year, they're not going to start splurging a load of money on people. First of all, they've already extended the SME, the support for mortgage interest. That's now at a 3-month wait, which it used to be 9 months, isn't that? That was brought in a few months ago. So support for mortgage interest. So if you're applying for job seekers or universal credit, you can then get SME, and you only have to wait for 3 months. And that, as you know, pays interest on your mortgage for forever because it's pretty much a loan now. It's not a government benefit. So that might be a good option for you because you've gone on to universal credit and you have to be, applying for job seekers or something to get that. You can't just get it. You have to be somebody who is in need of it as well. They've also allowed a lot more easy access to that. They're also funding the Money Advice Service as well. Money Advice Service, which is a government-controlled body, which is full of information, full of advice, money and pensions advice services, all debt advice, is all free. They're putting more money into that, more people to actually operate that. So I think that's a good thing as well. They've also got, and have had for a long time now, the Rent a Room. There you go, the Rent a Room facility, where you can rent out a room for $7,500 tax-free rent. That's not somebody has an Airbnb and goes rents the whole blooming thing. That's a room with a lodger who shares all the amenities in your house. So, okay, they haven't done a lot, really. In fact, they haven't done anything, but there we go. We're not going to go there on that one, have we? They just put a few more quid in the Money Advice Service, but then they're getting so many calls, they have to anyway. But it's the lenders that are looking at it. So if you're doing a mortgage MOT for a client, it's worth knowing about this because you can certainly steer them to where they need to go. Now, what have the FCA done? The FCA, of course, rather busy at the moment with Consumer Duty. You wonder about their timing, don't you? Anyway, they're involved in their consumer duty, but they have actually amended the rule book. So the actual the mortgage rule books, etc., have all been amended with this information. MCOB 13 with these switches and stuff. So we'll just put there MCOB 13, so you know exactly that this is the rule now that has now changed to allow all this switching to interest only and stuff like that. The PRA as well have poked their head in as well. The PRA, as you know, look after the banks, the big banks, insurers, and they've stated that they don't think any of this is going to affect the capital position of lenders. Because the PRA are about capital adequacy, aren't they? Prudential capital adequacy. So they don't think any of this is going to cause a problem to lenders' capital requirements. Although a lot of lenders actually are building up their profits in case they do have some bad debts they've got to deal with at some point. Because although you get a freeze repo for 12 months, you might find a few repossessions coming in. Of course, people, after being 12 months of in arrears, they're going to be, I mean, their mortgage is probably going to be more than the value of the property. So a lot of lenders are putting money aside to pay for that. But the PRA don't think they need any more capital provision. So the regulators have given it their thumbs up. Jolly good show indeed. So that's the UK Mortgage Charter. Useful for you as a broker to understand that. Of course, when you're talking to clients, MOT clients, you need to have this information at hand. Obviously, you don't deal with it. You refer them onto the various websites and everybody's a winner. Sad times. This seen it before. Big one was back in 91 when we had large amounts of repossessions. Interest rates shot up. Horrible time. Don't want to recall that time at all. People losing their houses is not a nice thing in however you look at it. And I think this help will actually be of assistance to lots of people. Although I think this switching to interest only is only going to help these people with great big mortgages who are finding it difficult to afford it, which is important. Anyway, that's the Government Mortgage Charter. Hope that's been a good update for you. Bye. Alrighty. So let's now move on to another topic, and we talk about this kind of environment they're in right now, which is not easy, however you look at it. We've got high interest rates. We've got definitely a recession because the Fed, the European Central Bank, and the Bank of England are pushing those three economies into recession because that's what they're doing. Because that's the only way they can get inflation down. Because it's hovering. The underlying one's hovering at 6 or so percent. It'll hover at 4, 5, 6 for a while, for a long time. But the problem with that is it will suddenly take off 10 to 10. You have another shock in the Ukraine or whatever, and it'll go back up to 10. So they would need to bring it down to the 2. 2% is their target. And the only way they can do that is by vigorous action. And the only way to do that is to push us into recession. Recession stops businesses and consumers spending money. It obviously, demand falls, supply of products will they'll reduce prices, and that's how you'll get the recession. The recession will kick in. That's how you get inflation back down to 2%. Horrible, I know. Interest rates therefore will remain high for a good few years, if not forever now. Now, we only think 6, 7% is high because we're used to like 1 or 2, aren't we? But they'll remain at that level for a long time. The mortgage market will not be particularly buoyant for a while. I mean, the housing buying and selling market is not going to be buoyant for a while. Looking around Cheltenham, there's hardly anything on. And stuff that has gone on is sticking on the books for months. It's not even budging. If something sells, it's because of debt, divorce, downsizing, and what's the other one? There's debt, divorce, death, and downsizing, the Ds. They're keeping hot property market moving. Estate agents are already laying off, closing branches. You can see some of the lenders now slimming their BDM sales forces. So, be prepared for it. Be prepared. You just got to prepare for it. I mean, it's not negative thinking. I'm not being a neghead. I'm being practical about this. You need to prepare and do something about it. And the first thing you might want to do is sort out your head. So let's talk about how you can be attractive in your head now. This is a very useful piece of information that will help you as a advisor. So let's go to this whiteboard. So let's flick across here. Hello from over here. The subject is how to be attractive to clients. And I'm not talking about, putting your best suit on, all that kind of stuff. I'm talking about your attitude. And I'm not going to go like wowsy, positive attitude all the time, because you've got to be very practical with this. Now, way back in the day, in 1991, I worked in an estate agency as a mortgage advisor. Had a great time, loved it. And we had this fella who worked in the Guildford branch, this Guildford in Surrey, rather nice part of the world, commuter belt for London, that sort of thing. And his name was Mark Haddon White. Now, Mark, if you're listening to me, get in touch, But Mark Haddon White was about 20 at the time, and he was the best performing estate agent in the whole branch. Why? Well, he didn't have any pressure. The bloke had a trust fund for millions coming his way very shortly. And, bless his cotton socks, nice fella. He didn't need to really earn any money. He just did it, to keep himself active, really. Okay, he talked with a bit of a plum, which helped with some of the very rich vendors, but he was the best performing estate agent because he had this attitude of abundance all the time. He had no worries, no stress, nothing to cause him any anguish whatsoever. And therefore, when he came across with clients, he was just relaxed and confident, and it just like he was a big hit. Now, an abundant attitude, as I'm calling here, is very attractive to clients. If you have a mental attitude of abundancy, it means that you're confident, you're assured, you're happy in your own skin. There's no pressure that's bringing you down. I mean, you're not being sort of naive or anything, but you just have this positive attitude about things. If you have an abundant attitude, you wake up in the morning and you realize there's plenty of business around if you work hard enough for it. The pie is big enough for everybody to share. You can grow, you can thrive, you need to collaborate with people to get the best out of any business. It's all a very positive attitude, abundancy. So that's what we call that, really. It's called an abundant kind of attitude. There you go. And Mark Haddon White had this in spades because that's the way he was. Now, the opposite to abundance is what we call scarcity. An attitude of scarcity or famine. I used to call this famine and feast. Now, an attitude of scarcity is where you wake up in the morning and you're really stressed. The current economy is making people stress. I've talked to a lot of brokers over the last few months. A lot of them won't tell you. On LinkedIn, they won't tell you. It's all a bit sort of, look at me, I'm brilliant. But they're feeling very much pressurized. The business levels are like falling. Their money and income levels are falling. They're wondering sometimes what they're going to do. There's a lot of pressure on them. There's a lot of fear, a lot of anxiety. Mindsets are very negative. A lot of self-imposed worry. Belief about the future is not positive. Anxiety is kicking in. I mean, you could go on, can't you? But that's the beliefs of scarcity. Now, what I'm saying to you really is, okay, there's no magic pill for this, but if you recognize that you've got a scarcity frame of mind, then you want to turn it into an abundant frame of mind. Even if you just do it in public, with your loved ones, you can still be worried and anxious. Of course you could. It's human nature, isn't it? But if you start to think about having an attitude of abundance. So, there are opportunities out there, for example. You can diversify your business model, and you should. Maybe you got a bit of time to retrain, maybe as a financial advisor or something. I've been kicking that can for a year now. Last autumn I talked about this. Retrain, look at the protection market, look at debt management market, help people in their situations. Get into the bridging seconds marketplace, the development finance marketplace. That in recessions, those entrepreneurs still go ahead and buy properties, and there's still money around for that area as well. Cut your costs as a business. Reduce the pressure on your outgoings. We can all cut costs, can't we? Sometimes, without being ridiculous about it. Get a niche. Don't just be a broker that deals with everybody that's got a pulse. It's no good. Okay, no, a good market, you're picking off the low hanging fruit, aren't you? But in this market, you're picking up windfalls on the ground. So get a niche. That way, you become known. You get referred. You become an expert. Very referable if you have a niche area in your mortgage and protection advice business. Look at financial advice as well, which is affected by recessions, of course, but generally speaking, people have got the money and you're helping them to invest it. Pensions, equity release rates are high, yes, of course, but the equity release marketplace, we'd say we've been banging on this for a long time, And if you've still got your head in the sand, still waiting for that lovely first-time buyer for the 95% mortgage on the new homes that's selling, like hotcakes on the new home site, it's head in the sand time. So have positive beliefs, of course. Get rid of negative beliefs. You can work on your negativity. There's some NLP techniques you can use to get rid of negative beliefs. Of course, you're going to have worries and stress and fear and anxiety, but start to realize, that there is business in any recession. There is business to be had. You just got to work harder for it, a bit smarter maybe. Look at different areas, different avenues. Cut your costs, of course, to reduce your outgoings. That way you don't need so much money to come in. Maybe you got a bit of money you put away during the good times that you can now use to supplement your income, of course. That's always a good thing as well. So look at that. So reduce the pressure on you is another one. I know it's not easy. I've been in a situation where, was it 10 years ago, just after the financial crash, we had a mortgage at the time of about £400,000. I had unsecured debts, credit cards of about 60 grand. I'm not joking. We just built this huge extension that just went out of control. The credit crunch kicked in. I had 3 very small children, had no idea what was going on. It's pressure. It's stressful. Don't get me wrong. I've been through it. You have to work through it, work a plan and work through it. So what I'm saying to you then is do what you can to move into this attitude of abundance. It's not smiley, smiley, happy, clappy, big positive attitude kind of scenario. It's not like that. It's realistic, but you know that there is business there out there for you. There is going to be light at the end of the tunnel. We will come through this recession. We will come back out of it. Interest rates will come down a little bit in a couple of years' time, probably when they've contained inflation. It'll be a better marketplace for it. There'll be less people in the marketplace. There'll be less competition. You wait and see. The mortgage market tends to do that. A lot of people in it, and then they get back out of it very quickly when they can't make the money. They have to change their jobs. And I'm not knocking that. It's just the way it is. Financial advice sector will maintain itself and will grow. Plenty of opportunities there. And if you want to talk about retraining, talk to me about it. We've got a scheme this year. I haven't had a lot of people on it yet, but we're going to be running it this year and next year. I've spoken to my friends down at the LIBF because we're really pushing their DIP FA. And I think there's mileage for you to do that, to get into that world, because it's the same business at the end of the day. So it's all about having an attitude of abundance. The alternative, of course, is to be age 20 and have a trust fund coming your way in a couple of months' time of millions. That'd just be lovely. Although I don't know if I'd end up working and move to some desert island somewhere and have a good time. But that's all about abundance. I hope you found that useful for you. Bye. There you go. Do you like that one, did you? Do you like that one? It's quite funny, isn't it, when you look at it like that? When you look at attitudes and things. And yeah, you've got to work it. You've got to work it. You've got to get summer now, haven't we? September, October, November, December. It will be hard. It will be difficult. You'll see some things happening. Recession will start kicking in, and it will be hard, but we've got to work at it. And you can work at these things. Been through them before. Just make a plan. Going to make a plan and move forward, and that's the whole way of operating. Anyway, enough of that. I hope you're all right. I hope you're having a good Monday. We're going to have a good week ourselves this week. We might take an afternoon off, go for nice walks, and go for a cycle ride or something. Energize yourself during the summer, which will be nice. What have we got coming up at Tivoli Studios? Well, the online version, of course. On Saturday, we start our Unit 1 financial products and market podcasts. We're just refreshing our first set of podcasts, about 8 or 9, I think we're doing, every Saturday morning during July and August at 10 o'clock. Free if you want to come along, just listen and hear and comment if you want to. So that starts this Saturday. Remember, guys, you've got to be on our member list to get the details and the invitation. And if you're not on our member list, here's how you can do that. So here's a little QR code. If you're on a video here, pause it now. QR code, get onto our database, our member list, as we grandly call it now. So you can get onto that from our website as well. And we get you an email out every Monday, but we give you lots and lots of goodies because we're that kind of people, really. So that's coming up this week as well. The second cohort of our diploma, DIP FA, has started this week as well. So we've got a few people going through their FUSRI, then on to their coursework, and then their final exam, which will be next year. We're guiding people through that. again, we're keeping that going for next year as well. So keep in touch if there's anything we can do to help you. Other than that, have a fantastic Monday and a great week as well. Good weather this week, hopefully. Enjoy the summer because it's a great time, isn't it? Enjoy the tennis if you're watching that. The cricket, of course, we're 2-1 on the Ashes, so we're doing okay on that one. Other than that, I wish you all a very good day. So let's just focus on that. Let's move on to there. Very good day, and I'll see you all again very soon. So take care all. Bye for now.